Welcome back to the Rebel's Edge, folks, where the market opens down big. And then, of course, it comes all the way back, goes into positive territory because it's a day that ends in day, which means those of you who aren't paying attention to the trillion-dollar monsters need to do a better job of paying attention. We're going to give you the 411 on all of that on the Rebel's Edge. Bang!
And action. Here we go, man.
Yeah.
Start of another week.
Yeah, but a holiday shortened week, Pete. I think a lot of folks are still not used to the idea. Texas was the first state in the union to do this. And I bet most of you don't know why. So rather than asking you, I'm going to tell you. Apparently, Juneteenth, which is the 19th of June, coming up Wednesday, is now an official holiday. But Texas was the first state to observe it back in 1980. And the reason is because there were, after the Civil War and after the Emancipation Proclamation and all that kind of stuff, Pete, they didn't know that the slaves were freed, so they had to go basically send some Pony Express guys to Texas to tell everybody, hey, the slaves have been freed. And so that became known as Juneteenth because that's when they arrived in Texas. So Texas, first state to observe this. Now, for the last, I think, 3 years, Pete, this has been a national holiday. So we will not trade on Wednesday this week because it'll be Juneteenth. We will not get mail on that day either. And probably Congress is out of session, probably taking the whole week off anyway, Pete.
Yeah, well, those guys like to work really hard, as we all know. So, yeah, I could see where they might have to. They probably need a break, John.
Yeah, they probably need a break. Yep. They're busy giving away our money, Pete. Even money we don't have, they're busy giving it away to foreign countries to build walls, and yet they don't like the wall between us and the South. But they'll give everybody else money for walls, just not us, I guess. Anyway, all right, enough of that. We're going to talk about market moving information. Some of the stuff I just covered will move markets in the future, but not right now. Let's start it off, Pete, with the macro minute. And today I'm going to say the Fed dot plot suggests central banks will cut interest rates one time. That's what the dot plot says. That could change because that one time right now is September, Pete. Other than that, we're not really looking at multiple rate cuts for 2024.
No, and on that, I'll piggyback a little bit on that, John. I even wonder, and I know you would say the same thing. Okay, so it looks like September is the best opportunity potentially for a cut. The only reason I would say, well, maybe we ought to backpedal even off of September, and I've been saying September too. The only reason I'm saying maybe we ought to backpedal, though, is it's a presidential election year, right? So is that going to have some form of effects and whatever? And that's something I suppose that they've got to give some thought to. But so I'm looking at December, and that's where Cash Carey, John, was talking about it too, the Minneapolis Fed. So he said probably just one cut this year. And, you know, for the people who said 6, John, should we ever listen to them on anything ever again?
No.
We all know who you are.
Yep. The great thing is that you know, the internet lives forever.
Right.
And people that said stupid stuff like that, Pete, first of all, 7 cuts. I wonder how bad they thought the economy was that it needed 7 cuts.
Right.
Now, I don't think it's a raging bull economy at all. I think we're being driven by, you know, the $3 trillion stocks primarily. That's why we opened down big and came all the way back because Microsoft and Apple both up. NVIDIA, soft, down, what, 0.5% or something like that. But those are what drives the S&P and the NASDAQ, Pete. It ain't anything else.
Right. Yeah, absolutely. I fully agree with you.
Well, and by the way, folks, he is Pete Nigerian, so if you need to send any hate mail or anything like that,
even if it's coming from him, this guy over
his appearance on mornings with Maria or anything like that last week?
Hey, I'm going to be joining somebody else on Wednesday on Juneteenth. I'm actually working. Yeah, well, there's a cute little gal from Berkeley, California, who's out there at Fox Biz. So I'll be sitting in with Liz Clayman on Wednesday.
On Juneteenth?
Yep, Juneteenth. They asked me. I said, "You do know it's Juneteenth?" And they said, "We do." So I'm in.
All right. Well, yeah, that's a great show. Liz does a fabulous job. And it'll be one reason to watch business television that day, the fact that you're on it, Pete. All right, let's get on financial futures. And I'm going to say fantastic futures today, Pete. Our digital assets, I'm going to say for a change, Ethereum's down 3%. Bitcoin is down 1.5%. So both of those softer today. That's my bit of fantastic futures, Pete.
Well, John, I'm kind of moving this into something that I think, as long as it's worth talking about, I'm gonna hit it each and every time that we do this, which is volatility. And I'm going straight back at the VIX again today. And why I'm doing that is, if you look, John, it has become even tighter than it was a week ago in terms of where is it right now. So close your eyes for 1 minute. Well, let's see. The VIX is somewhere between 1190 and 1290. Now, we did get above 13 today, and then we pulled right back down again. So I'm just looking at that volatility index. We know what's going on. We see what's going on. We've had this tremendous run to the upside. You were just talking about driven in part by basically 3-4 stocks, at least a few that are in the $1 trillion club. And when that's the case, a lot of the time, John, it just gets a little bit tighter. So until things change, we are in a very, very tight range, and a range that I still think needs to be bought by people because of the fact of where we are right now, and looking back 4 or 5 years where we've been on the low end. This seems to be the low end right now for the VIX.
Yeah, I would agree. And I think that there's not a lot that's probably going to drive it higher or lower this week, Pete, because again, it won't be quite the same, folks, as the 4th of July holiday, which is the other Independence Day that America celebrates. That'll be occurring in 2 weeks. But this Juneteenth Independence Day, occurring as it does in the middle of the week on Wednesday, nobody's really going to be able to get out to the Hamptons and back and all that stuff. No. It's probably going to be a day when people relax. Maybe they shop or do something, but I don't think it'll really be the same kind of desert the trading floor by noon on Tuesday tomorrow, the same way it would be if this was a Friday leading into a 3-day weekend. So be aware of that, folks. Yeah. All right, let's get started with Autodesk, Pete. ADSK, Starboard Value. Now, this is an activist fund. That's what they do. Starboard, that is. They've taken a $500 million stake. And that's how they do what they do, folks. They buy stakes in companies, and then they say to the company, hey, look, we don't think you're doing the greatest job operationally, governance-wise, and or getting to better profitability. So we're going to take an activist role, and we're going to try to change your board and get you to do things that we think will make you more profitable. It's a very interesting part of the market, these activist investors, Pete, because it's not like Warren Buffett. It's not like a lot of investors that are just buying for either the long term like Buffett or the short term. But guys like Carl Icahn or Starboard, they really work on this, Pete, and they get what they want most times, don't they?
Yeah. Well, I find this one to be pretty interesting. First of all, John, and I'm not going to be overly critical of Starboard, but what's wrong with this company? I'm taking a look at things and I see it's trading at a PE, call it 27, 28. That's not that bad in the markets that we're in right now. They've got solid revenue growth. They've got very solid earnings growth. I mean, I look through just about everything, and they've got a $500 million stake. Now, to a lot of people, we'd say, well, that's a pretty healthy stake, right? It's not that healthy when you consider the fact that the market cap is $51 billion. So this is a stake for sure, and they really seem to have something going where they really want to go right after some of the folks behind the scenes right now that are sitting on the board. But all things considered, John, I'm looking at it going, all right, so let's see. The stock price in the last 52 weeks is 192 all the way up to 279. Here we are at 236. Show me what they're doing wrong right now, because I'm looking at all the numbers and they look pretty good. Now, you might be angry about something. I don't know what exactly it is, but if I'm the folks sitting at Autodesk right now, I'd say, hey, you know what? You're not even at the big table yet, big boys. You guys need to come back with a heck of a lot more. You want to start swinging something around. I don't know. That's just my take. Maybe that's a little too aggressive, but what do you think about that, John?
Well, I'm going to say, Pete, I'll push back on this.
Sure.
If you look back to August of 2020, the stock was right where it is now. So in other words, dead money. Why? Well, because they don't pay a dividend. So if you've held this stock since August of 2020, let's call it pretty dang close to 4 years, you've held this stock and you don't get a dividend, unless you do what Pete and I do, which is creating a dividend by selling upside calls. If you've been selling upside calls, you're pretty happy, because what you want is a stable stock that you can sell upside calls against it and make that money as your dividend or your rent. But this one hasn't given shareholders anything in these last 4 years, Pete. So that's why Starboard's in here. They probably had, I'm going to guess, Pete, they probably had like a $50 or $100 million position in here. And then they were just getting ticked saying, hey, this is a great company, but it's not performing at all because our money is the same as when we invested 4 years ago. That's why I think people aren't real happy about it. We'll see if Starboard has good ideas. Sometimes a lot of what they do is the same thing, Pete, that a lot of private equity does, and that is lever it up, put a bunch of debt on the company and all that stuff. That's not a good idea. Right. But we'll see what their ideas are. I haven't heard them yet, but that's why I think Starboard's in this one, because it hasn't performed in 4 years.
Right. Yeah, that's fair.
All right. Let's jump on Best Buy. This is one of Pete's stocks up in Minnesota. Best Buy gets an upgrade from UBS. They basically say, you know what? We're upgrading our rating from hold to a buy, and we're giving it a higher price target. Now, both those things are good, Pete. I would say Loop Capital and D.A. Davidson and Citigroup all like this one. How about you? Do you like what Best Buy's doing, and would you say you think it's going higher still?
Yes, I like what they're doing. I'm looking at the fundamental side of it. I see a PE of 1.5, John, 15. I mean, so you talk about inexpensive in a marketplace that sometimes people love to just say, well, you know, these PEs are really stretched. Well, not for Best Buy. It's at a 52-week high, and it's trading with a 15 PE, by the way. They got a dividend yield of something north of about 4%. I think, you know, they go through the ups and downs when you're in the industry that Best Buy's in. And there's been some ups and downs over time. But right now, they're definitely on the upside. I like what they're doing, John. I think they're doing just about everything right. Believe it or not, this name has a little bit of a short interest in it as well, about 7 to 9%. So that could add to it and maybe push it up even a little bit further until some of those shorts get squeezed out. We'll see how that happens. But I think when you look at this right now with free cash flow, everything else, I think Best Buy is a Best Buy.
Well, this one is different, folks, than the previous stock, and here's why. In my estimation, these guys, Best Buy, give you almost a 4.5% dividend yield. So in the previous example, I said, hey, Autodesk doesn't give you any money. They don't want to give money to perfect strangers. So this one does, though, and 4.5% ain't bad. But if you look at it in the last 4 years, Pete, it's right at the same level. It might be breaking out now from that, but it's at the same level for 4 years as well. The difference is, of course, just what we said. This one gives you 4.5% a year. So over those 4 years, you've made some pretty nice money from the dividends, even if you're not an option seller against your stock, which we call a covered right, folks. Even if you don't have that going for you, this one still gives a pretty good amount of money to you every year. 4.5%, that's damn near what a REIT pays most of the time, Pete. So I'm going to say, yeah, I like Best Buy, and believe it or not, I like it more than Autodesk. for that reason, even though, like Pete said, it's in sort of that more difficult retail space, because that does have ups and downs, but we're coming into a period where we usually see ups, and that is into the Labor Day is when I usually like to buy these. All right, Pete, what about Broadcom? Now, they have sort of refocused attention to where it should be focused, which is, I think they're the new darling in the AI space. Pete talks about it, and he did talk about it with Maria last week, talked about how, you know what, power consumption of these AI, artificial intelligence, like Chat GPT and so forth, are one of the things you got to watch. And he talked about nuclear power providing a lot of that. You're absolutely right, of course, Pete, about that. Broadcom, they have now sort of embraced the idea that, hey, we're an AI play as well. And maybe you guys better focus in on us. And that's why the stock boomed after earnings last week, Pete. We already talked about how we stuck them hard in that unusual option activity, but Broadcom continues higher even today.
Yeah, and they did, John. And also, let's not forget, this is a company that's talking about this 10-for-1 split, right? And that's not too far away, a little bit into the future, but not that far away. AI strength was definitely something. How about this, John? The revenue was $3.1 billion for the quarter in just the AI side of things. That was a new record. And revenue was up 43% year over year. So Broadcom is doing a lot of things right. Of course, when you add in the two letters, A and I, that's always going to give you a boost. But it ain't BS, John. Those are real numbers, and that's billions and billions. And like I say, a record quarter. That's pretty impressive. This is a name that I think you definitely want to keep track of. And maybe you've got to wait a little bit for that split. You know, that gives the opportunity for a lot of folks that they maybe don't feel like they have right now because of the cost of either the stock or the options themselves that cost a lot of money when you're trading where they are. So interesting stock. I think they're doing a lot of things the right way. And obviously AI is an absolute booster for this company.
Yep. Chips ahoy. That's what we said last week, and I'll say it again. Chips ahoy. All right, Pete. Now let's tell everybody about a stock that we more or less helped introduce many of you to just in the last few broadcasts, and it's ASTS, which is AST Space Mobile. Now, we talked about GoGo, you know, the provider of cell phone, or not cell phone necessarily, but Wi-Fi services to airplanes and so forth. Same thing goes on with, you know, when you get onto an American Airlines flight, it's usually GoGo that provides it. If you go to United Airlines, you get a different provider, Intersat. But these guys providing satellite to cellular, and they announced a deal, Pete, with AT&T, and now this deal with Verizon really seems to be putting a turbo boost on this one today.
Well, a turbo boost also on a company, and you know that I'm going to bring it up, 22% short interest, John. These guys are scrambling. These guys are getting squeezed. I mean, so the possibility of what's going on, AT&T and Verizon, and the fact that they're going to try to basically be able to cover full coverage of the entire U.S., that's pretty impressive. I think people are understanding that. They do have a cash burn, but with the new partnerships and the strategic partnerships that they're making, I think they're going to be just fine. And that's got to have these shorts really, really feeling like, man, we better cover. And that's what I think we're seeing today, because earlier it was up about 6 or 8%. I just took a quick peek while you were talking. I think it was like 12 or 14%, something close to that. So it is on the move to the upside for sure.
Yep. Largest and most powerful commercial communication arrays ever deployed in low Earth orbit. That's ASTS, folks. And don't forget where you heard about it, right here with Pete and John. All right, Pete, I didn't have any real compelling videos to share with you today. So instead, we're going to dive right into your sports, which you, of course, cover on the Sports Huddle, WCCO AM 830 and Odyssey Network. What were you guys talking about this weekend, and or What do you want to talk about today on this section of
Well,
the Rebels Edge?
we did talk a little bit about this yesterday as well, John, but I think it's fun to talk about it here as well, especially from the video perspective and, all the different outlets that we've got. But I think NFL tampering is an interesting one, right? I mean, anybody who's following the NFL understands the storyline. It's not just one, there's multiple different cases, but the primary one, Kirk Cousins, and the fact that they were tampering. The Atlanta Falcons decided to do a lot of things, and Kirk might have opened his mouth a little too much about, well, they're going to have to get some of the travel taken care of and this, that, and the other. And it's like, wait a minute. You can't be talking in those 2 days before you get to that Wednesday when it really opens up for free agency. First of all, I think that's ludicrous. They got to figure that whole thing out. Number one, John, is, okay, so it's kind of tampering. It's kind of not. I mean, there's nothing that's really, really clear. And I think that's a bit of a problem. But I went through it and I was looking and I was saying, well, the Chiefs a couple of years ago, John, they got fined basically almost identical to what we're seeing right now going on with the Kirk Cousins incident, where $250,000. Okay, so that's to the team. Andy Reid had to pay $75,000, and the GM had to pay $25,000 because they were going after Jeremy Maclin, right? I mean, so that was something, and they were tampering. So that's what they did. Oh, and by the way, they lost a third and a sixth rounder. So that's all part of what the slap on the wrist really was. Now, I say that because what really can stop this is what they did a few years ago with the Miami Dolphins, John, when they reached out to Sean Payton and to Tom Brady. And the NFL took a look at this thing and they're like, hey, wait a minute now. You just lost your first round pick and your third round pick. A first round pick hurts, right? I mean, you take away a fifth or a sixth or maybe even up to a third, not that big a deal. You take a first and a third. I would guarantee you one thing. The owner, Ross, and another one of the owners, Beal, who took fines as well, $1.5 million and $500,000 each. I don't think Miami's ever going to do this again. Now, I say that, and I look over at Ross, who owns the team, the primary owner, and I'm like, well, $1.5 million to a guy like that, he can sneeze that, John. So it's not that big of a deal. But nonetheless, I think the NFL has to clean this up. They got to figure it out. And I think it's really more on them than the teams and the tampering that they're calling tampering. But if you're going to really hit them hard, I guarantee you this. If they said to Atlanta, you know what, that's fine, you got Kirk Cousins, you don't get a first rounder in 2025, they'd be crying just a little bit, but that's too bad. They've got to figure this out. What do you think about this whole thing?
Well, I think it's kind of ludicrous, Pete, that they have the free agency signing so far away from the last game of the year, because the last game's the Super Bowl. It used to be that they'd have Pro Bowl and things like that, Pete, that would occur after the Super Bowl. Sometimes then they moved it to before the Super Bowl, but these days the Super Bowl is the final game.
Yeah.
So I would say a week after the Super Bowl, they should make that free agency. That the contracts only run till then, and then do exactly what you said. Come down hard on anybody that is tampering before that date. But give them a week and then say, hey, free agents? Yeah. I mean, I think partially, Pete, the way it goes right now, it works because they love the fact that they can talk about it on the NFL Network. And as you've said, it extends their season, for months and months. And then all of a sudden, hey, it's OTA. Hey, it's mini camp. Hey, it's this, and the preseason starts up, so it keeps it rolling year round. It still would, but I think, put a hard and fast date on it that is much closer to that final game, the Super Bowl, whether it's a week or two, and then do exactly what you said. Hey, tampering, if there's any tampering at all, it's a first rounder and a second or whatever. Yeah. And you wouldn't see anybody doing anything before that date then. Nobody would risk that.
I would say that is 100% right. It's all about the risk and the reward, right? Just like our business in the options world, risk and reward. Well, it's the same thing in sports. That's why we do this. That's why we talk about the sports blitz. We both played in the NFL. It's really similar, right? And if the penalty is high enough, John, it will keep you from doing some of these things. I can guarantee you that. So I would say this actually is probably putting a little bit of a shock into the league right now. But by the way, Roger Goodell, who does he work for? The owners. So they've got to get together and figure this out. And there's enough good owners out there that probably wouldn't tamper, that I think that you could get a majority to go in there and say exactly like you were saying, John. Hey man, you're taking a first, or we're taking your first and your second. Sorry, but that's just the way it goes. How about this, John? In college football, college sports, really, you've got all these conferences now. The Big 12 conference is very heavily considering what they want to do with naming rights. And so we have already ruined college football to some degree, in my opinion, with the NIL. We've done it with the way they've created the portal, where you can just go in there whenever you want and just throw yourself in there every year, every other year, whatever you want to do. They are ruining things. But now I want to sponsor something. Now, I get it. You can get money this way, right? How about the All-State 12? Not the Big 12, the All-State 12. Now, the only reason that might make sense to start doing that, let's be honest, John. You know what teams are in the ACC right now? Let's see. It's Florida State, it's Clemson, it's Cal, it's Stanford. Wait a minute. Cal and Stanford are on the Pacific Coast, aren't they? They're not in the Atlantic. What the hell is that? So, you know what? These conferences don't mean anything anymore. They've been other names anyway, and blah, blah, blah. And sooner or later, I think this is going to happen. But the one that kind of bothers me, John, is this one. Private equity wants to get involved now, right? They want to invest in conferences, right? And they've been talking about this. Now, here's the problem I have with that. Do you have concerns? So I'm asking you, you're much better with this type of stuff than I am. But so right now, private equity goes in for a 20% stake of the Big 12 for $1 billion, okay? Now, what happens if that private equity firm, and this does happen, has an issue financially? What happens then, right? I mean, so if they're investing in here and all of a sudden they go kaput over here, what happens with the Big 12? What happens with that stake that they've got out there with this private equity group and everything else? That concerns me probably more than the sponsorship. What do you think on this topic? It's right up our wheelhouse, man. It's sports and it's money. So we kind of got this one cornered.
Well, I like the way that our friends over at ESPN come up with nicknames like the Norris division and things like that in hockey. Yeah. And and by the way, ESPN folks, for those of you who don't know, it used to stand for Eastern Sports Programming Network, ESPN. But then, of course, it became just, sort of like Xerox for making copies. It really did. It encompassed all sports, not just Eastern sports, and not just hockey, as it was more or less set up to be, I guess, Pete. Mm-hmm. But I would say it would be about the same, Pete, as something like the FTX Arena, which used to be the American Airlines Arena in Miami. And then FTX bought that naming right for the arena. I think it lasted 1 year. And then Sam Bankman-Fried bankrupted his company, basically, by he was accused of and convicted of theft. So we'll say that he was a thief and took that money, and they took his name off that arena. I would think the same thing would happen, Pete, with the Big 12 if it instead went from Cerberus Big 12 or whatever, Blackstone Big 12 or whatever, firm might put their name on it. If something bad happened and they couldn't make the payments, same thing as any of the stadium rights deals that have occurred and fallen apart since. Because several have. Remember, there used to be a curse of a stadium naming rights. AT&T has managed to survive pretty well as the Cowboys naming right down there for the Cowboy Stadium. But there are examples, plenty of them, where companies have failed and then they took the naming right away because they weren't able to pay anymore. And I think the same would be true, Pete, with private equity. They just put it back up for auction and see who wants to pay.
Yeah. It could be really interesting. Well, anyway, we've got all this realignment, John, and anything. So I guess if you're going to go for it, you go for the sponsorship part of it. I don't know about the investment part, but the sponsorship part, I mean, you've got Arizona, Arizona State, Utah, and Colorado all coming into the Big 12. So if that truly is the All-State 12, which is truly what a lot of people think it's going to be, I guess if you're going to do it, now's the time, right? I mean, it's no longer the Big 8 like you and I knew it that turned into the Big 12, or the Pac-8 that turned into the Pac-12, and now it turned into the what? The nothing. So it's interesting. It's an interesting time in sports, and money always leads the way, John. It always does.
Yeah. Well, you give people the equivalent of a $3 or $4 billion franchise in college sports. And it's going to change some things, no doubt about it. All right. Thank you for joining us, folks. We'll emphasize that you can always grab our book, It's Not an Option, by going to It's Not an Option. The copy is free. It'll cost you, I guess, $9 to ship it. Something changed in the last few weeks, Pete. I guess they're selling so many books that they'll give you the book for free, but you're going to have to pay for shipping. So I just wanted to clarify, because a number of you have said, hey, shipping's not free anymore. Well, I guess you should have bought it back when it was free.
It's about making a move, man.
The book is still free. So make sure you sign up. You can get it at itsnotanoption.com. That's itsnotanoption.com. And Pete and I will be back at 1 p.m. tomorrow. See you then, folks.